Hey everyone, this is Richard E. Today is October 12th, 2011. So the first thing that I'm going to talk about today is the tariffs bill that was passed yesterday in the House of Senate in an effort to penalize China for undervaluing its currency by placing the tariffs on Chinese imports. But obviously their motives can be more clear. The politicians in the House of Senate are trying to push the responsibility of high unemployment in the US to the shoulder of China. Sure, undervalue of rent does cause some unemployment in the US because it would be less costly for the Americans to import Chinese goods. Therefore, American manufacturers will rather shift their production supply chains to outside of the US, which will be less costly for them. But the other fact that has been largely overlooked is that why has manufacturing in the U.S. has been so less competitive compared to the rest of the world, right? Why are manufacturing jobs leaving the U.S.? The manufacturing jobs are leaving the U.S. precisely because the regulations and taxes in place have made the manufacturing industry in the U.S. so uncompetitive to the rest of the world that even though it's far away, but many importers are still willing to buy goods that are made in China or other countries instead of manufacturing locally in the U.S. just because the taxes and regulations have made it so uncompetitive just to make them locally. And none of the politicians in Congress are actually addressing the fundamental problem which caused unemployment in the US, which is high regulations and high taxes. I mean, if you want to have better employment, you better get rid of the taxes and less regulation, which will allow entrepreneurs to create more jobs, give entrepreneurs the incentives to start businesses. And yet, most of the politicians they ignore the high taxes and difficult regulations. Instead, they focus on the much minor problem, which is yuan undervaluation. I mean, this cannot be more ridiculous. And this politician is really short-sighted. I mean, they only see the immediate effect of such a policy, which just put tariffs on Chinese imports. They do not see the long-term effect. I mean, the long-term effect might well be, other countries, including China, they see that U.S. is stopping such a trade war policy. I mean, they're going to place tariffs on their imports from the U.S. I mean, a trade war might happen, and then none of the country are better off because of trade war. And the second thing that I want to talk about today is China has been diversifying its holding of foreign treasuries after the month of August, especially after the downgrade of the U.S. sovereign debt by S&P. And before, we have heard voices from the Chinese central bank that they're saying they're going to diversify their foreign holdings, including buying different kind of treasuries instead of only holding the U.S. treasuries. And now they're actually doing it. So in the month of August, China purchased $2.3 billion worth of Japanese short-term treasuries. Obviously, $2.3 billion is a really insignificant amount compared to how much China holds in the U.S. treasuries. But the important thing is China now is sending a clear signal to the U.S. that, hey, I'm not gonna keep playing this game anymore. I'm not gonna just keep exporting my goods and get your paper money, and then in the reverse, we loan the paper money back to you, and then in return, we get even more paper money. Hey, we don't like this game anymore. I mean, we need real imports from you guys, and currently, you guys are not providing, obviously, so we're not gonna play this anymore. This is the message that the Chinese government is sending to to the Americans. And what if one of the largest buyers, China, stop buying the U.S. treasuries? So what's going to happen to the U.S. economy? Well, the first thing that's going to happen is the Federal Reserve has to step in and buy even more from the U.S. Treasury because, well, since the major buyer, China, has left the market, and most of the Chinese holding a short-term treasuries, meaning the Chinese they don't have to sell their holding of U.S. Treasuries. They simply allow them to mature, and then that's it. They don't have to keep buying or selling. They just let them to mature. And what happens if China, the second largest economy in the world, stop buying U.S. treasuries? Do you think other nations wouldn't follow? Sure, there'll be some dumb nations out there who will just keep buying, but hey, many smart nations will stop. So what's going to happen is the Federal Reserve had to step in and start making the gap of buying those treasuries to finance the huge government. And when that happens, inflation in the US will be sky high. Because different from loaning money to the banks can simply park their money back at the Federal Reserve because Fed pays a interest on those assets reserves. So the banks basically they have the incentive to park money back to the Fed, so the money does not immediately leak out from the Federal Reserve yet to the real economy. Therefore, it won't cause as much inflation as it would. But loaning money to the government is totally different. The government doesn't park money at the Fed. The government spends those money in the real economy, buying goods and services, doing public projects. Well, when that happens, the money will eventually leak to the economy to every corner, and that's going to cause real inflation. And lastly, I want to take some time and kind of talk about inflation in China. As many of you already know, China has been undergoing a serious inflation situation, and prices have risen substantially. People's lives are in misery, and the prime cause of this serious inflation is the money printing by Chinese central bank. Combined with the 4 trillion economic stimulus plan that was adopted by the Chinese central bank in 2008 during the financial collapse, and the loose monetary policy afterwards, lots of money has been printed and circulating in the economy eventually caused prices to rise. I mean, pork price rose 45% from 2010 to 2011, and that's just crazy. Pork was a main source of food for the majority of Chinese. But in order to understand why things went wrong, we must take a step back and understand the prime reason behind the crazy money printing by the Chinese central bank. Why are they still doing it, even though the $4 trillion economic stimulus plan is already in place? And the fundamental reason is China has maintained a pact relationship in the currency exchange between China's yuan and US dollar. And in the past 2 years, the Federal Reserve has been printing dollar like crazy. And if the Chinese central bank doesn't do anything, the exchange rate between yuan and dollar will eventually rise, which threatened the Chinese central bankers. They're afraid that higher exchange rate will harm Chinese export, which in reality won't. But in any case, they were adopting this open market operation, which basically gives the central bank the right to buy dollar in the market, which decreases the liquidity of dollar, and sell yuan in the market, which increases the liquidity of yuan. Well, if you decrease the liquidity of dollar and increase the liquidity of yuan, basically you can still maintain a flat exchange rate. I mean, a constant exchange rate, even though the US dollar has been increasing in quantity. And that's why China ended up with like 3 trillion of US dollar in foreign reserves while having such a high inflation. It's because they have been doing this practice of open market operation for too long. And since the Chinese central bank has allowed Chinese yuan to rise against the dollar, which means even though the Chinese central bank is still buying the same amount of dollar, but it's not printing as much Chinese yuan to compensate that buying, which means in the market there will be relatively less Chinese yuan to compensate the same amount of US dollar, which will force the exchange rate to rise between yuan and dollar. Therefore, how much inflation will cool down in China pretty much depends on how fast the Chinese central bank allow yuan to appreciate against dollar. Thank you guys for listening. That's it for today, and I'll be blogging again soon. Take care, guys. Bye.